Hey everyone, if you are interested in setting up an entity, this video is for you. Also, if you've set up an entity and maybe you did it prematurely, you did it in a rush, you did it without an advisor, we'll talk a little bit about whether there's any benefit to it or not and maybe some of the implications with it. We're going to talk about the most common entity that there is in the business, and that's the LLC. We'll talk about the S-Corp, we'll talk about the C-Corp separately, but 9 times out of 10 in these industries where we have an S-Corp, we have a LLC taxed as an S-Corp. And again, that's a general trend that we see in the business. It's not a recommendation, right? So first disclaimer, this is general advice. It's not specific to you. So before you go ahead and run off after this video and take an action, just shoot me a note. We just want to have a conversation. There's always exceptions, and that exception may be you. So without further ado, I'm going to jump into this quick video, which is going to answer the question, should I set up an entity? First, I want to start with the right context. So you should see that there are different kinds of entities that you can set up. C-Corp, LLC, partnership, S-Corp, right? There's different tax traits with each one, and we're going to spend time covering them specifically. What you can see here first is C-Corp is a completely separate entity. So the one distinction I want to make is a C-Corp is a different entity, but it's also separate for tax purposes. So income and losses stay in that corporation and do not flow through to you personally. You have to take that money out as a dividend or salary. So we typically say with the C-Corp, you get double taxation. There are reasons when you would do a C-Corp. Again, we'll cover that later. But the big distinction I want to make is that everything here on is a pass-through entity, meaning that if you set up an LLC, partnership, or S-Corp, those entities are not taxed at their level. The income passes through to you, and all of that is taxed at your personal rate. So oftentimes when folks call in, they say, hey, what am I going to do on my Airbnb? And we say, well, I don't know, because we have to know everything that's going on with you personally. So we really need to look at you holistically. So this conversation is going to be looking at this side of the equation. I'm specifically going to talk about setting up an LLC and what the implications are on that, and we're going to work through that together. The big question number one, 3 major questions we'll answer together, so this is very short. Big question number 1 is, should I even bother, right? Should I even set up an LLC? Why would I want to do that? We have clients that call on all the time, well, I want the tax benefits of an LLC. I say, hold on. Let's talk about what those benefits are. There are people who want to set up an LLC for the legal liability. Are there other options to get that same legal protection instead of setting up LLC? So I usually like to start the question with an LLC and ask, how long do you want to run this business? Because they are easy to set up. And I think that the reason that they're so popular is because LLCs have very flexible structures, meaning you can set up a single member LLC, bring on a partner, and then bring them into the, and then you can turn your LLC into a partnership. An LLC can also turn into an S corporation. And if I really throw a loop at you, an LLC can also be transformed into a C corporation. And I say that with kind of asterisks. What happens is the IRS taxes you as a C corporation, right? So you get that treatment we were talking about earlier. So there's very flexible structure, but you still a process to set one up. There's still a cost to annually maintaining an LLC. So the number one question you should ask yourself is, am I going to run this business for 2 years? If you tell me a year, even tell me something like a year and a half, I might say, look, you might want to stay as a sole prop. The reason being is that there's a process to set it up, and there's a process to get rid of them. So you definitely want to be mindful of that this is something for those who are committed. So if you are committed, then you're still with me, then we can kind of still keep going. So when do they make sense, right? And that's where we get into the legal liability of one. And we'll talk about that on the next slide. And then the question is there a tax benefit? We're going to answer that again, question number 2, which is, how does this affect my taxes? The kind of punchline is that your taxes don't change as a single member LLC. They do as a partnership, right? You can see here how many partners will will impact. If you're a partnership, then you have to file a separate tax return called Form 1065, a partnership return. That's where you've got a buddy and you're running this LLC together, and you each make the whole partnership makes $100, spends 50, there's 50 left, and then you've got to split that 50, right? So a partnership is a formal way, and actually the IRS considers any operation with two people automatically default as a partnership. So from a tax perspective, if you have a partnership, partner where you're splitting income, the IRS is going to come in and say, you know what, you should have an LLC set up around this. So it does make sense when you have an arrangement with multiple people. We do have clients that say, hey, I've kind of got this, homey deal with my friend across the country, and we're co-running this Airbnb. We're splitting the income. That's fine. We can represent that on a Schedule E simply. But ultimately, for legal reasons, for financial reasons, it does make sense to set up a partnership that kind of dictates the operating terms. So how many people you have will impact how you're set up. It'll also impact how you file. If you're a single member LLC, and this is kind of the thing that I think trips a lot of people up, is do my taxes change? And I hear a lot of people call in who say, I hear I get more deductions. Yes and no. I think the LLC gives you formality that allows you to take better deductions. I think that as a byproduct of having an LLC, you will set up a separate bank account and you will use that bank account for the business. The value is that you've now segmented business versus personal officially, but hey, you can do that as a sole proprietor too, right? So I think that as a byproduct of setting up an LLC, you will be more disciplined about your deductions, will be more comfortable as your advisor with you getting aggressive about those deductions, but just note that it does not have to be the case. It is not a mandatory requirement. So I think that's really important when you're thinking about what the tax benefit is, because some people might say, I mean, I know a CPA in the practice who says there's no benefit, right? It's the same thing. So the reason must come from somewhere else. And that's where we get to the legal liability component, which is super important, which I want to talk about more on the next slide. But before I jump to that, this question of how easy are they to set up? If you're in California, you file one form, you pay $70, and boom, you have your LLC online. Then you set up an EIN, then with the IRS, and with those two things, you can walk into a bank and get a bank account. So they're pretty simple to set up. What's the catch in California? It's $800 a year. So you're going to pay every year. Very easy to come on in, California says. But once we got you, that's $800 on top of anything that you make. It's not whether you have income or losses. It is called a franchise fee, meaning they charge it annually. Delaware, you have a similar arrangement. So come on in. I think it's something like $200 in Delaware. So, a little more expensive, but every year you're going to pay $400, right? And these things are going to be true for every state. Now, there are states that have very favorable LLC rules. And before you go off and start an LLC in a state that considers you or that will give you low annual fees, just understand that there's a lot of cases where you've had California folks set up an LLC in Nevada because of the tax benefit, anonymity, and then when they get sued, when they go try to get that legal protection, there's been cases that have said, you know what, we're not going to recognize that because you don't even have an LLC in the state where you operate. So be very careful. We are not lawyers, so make sure you get legal advice around that liability. But just generally speaking, the trend that we're seeing and what our lawyer friends say is you want to have protection in your home state. Even if you do incorporate or organize in Delaware, which has very favorable, case law, and there's reasons to be headquartered there, those companies still have what's called a foreign corporation or a foreign entity in their home state. So it's like they're headquartered in Delaware, but they have a version of themselves in California called a foreign corporation. And this is going to apply for other states as well. So just be mindful that when you're choosing where, you want to really be conscious of rules around home state, right? You definitely doesn't make sense to set up an LLC, pay all this money, and then on top of it, you're not even getting the legal protection that you were looking for. So let's wrap that all up. the big question is always, what's in it for me, right? That's our third and final question. What's in it for you? Legal liability. This is where I want to really kind of hit home on why people do this. And if we go back to the first slide, I didn't really talk about it, but in the first part of the screen, you see me and you see clients, but in between there's an LLC, right? Whereas a sole proprietor, I'm working directly with the clients, right? And so the logic goes, and again, this is general information, but so the logic goes that if client wants to sue me on the right-hand screen, they can't. They've been working with the LLC, so you've got to sue the LLC. What does the LLC own? Nothing. LLC can go kaput, and at the end of the day, you're still protected. So anything that you own in this example is safe from that. So you have what they call the corporate veil, not to be confused with the corporate veal, which they serve at some restaurants. So me, sole proprietorship, client wants to go after me, there's some risk, right? You can say, hey, you know what, Miguel, well, let's not use me as an example. You know what, Joe, I'm going to sue you, not happy with you. Maybe slip and fall, maybe something happened with the car as a tour owner. Maybe something happened with the client if you're a freelancer. You know what, I'm going to go after you, right? So having that protection, that legal liability is one of the main reasons that you can get that. Now, where I always push back, and I'll even ask this in a very friendly way with your lawyer, is, well, what are some other ways to get the protection we're after? And oftentimes what people are concerned about as Airbnb host is protecting their home. One way you can do that is, and again, we have referrals with attorneys if you don't have one, but if you have an attorney, go ahead and ask them, ask about putting your home in a trust, right? What that's going to do is that's going to, if you are in this arrangement, it's going to take your home, imagine a home up there, and it's going to put it in its own bubble, right? So if you're ever sued, it can't be taken away, right? So there are some ways to protect yourself without LLCs, and I think that's very important to know, because even if you do set up an LLC, you still might want to do that. We have very risk-averse clients who have been doing this for many, many years, who are very wealthy, who have benefited from years and years of good advisors. I myself, at my previous employer, worked with very high net worth companies where they have these kind of web of structures. They've got a trust here, they've got an LLC there, and what they're really doing is they're segmenting their liability, right? They don't want the liability of one business to affect the other, and ultimately they don't want anything to come back to them. So they want to be paper poor, right? You want to have your $5 million house. I don't have a $5 million house, but you want to have your $5 million house in a trust that no one can take from you. And there are a lot of benefits there. So again, that's where you start getting to the legal aspects of it, but just being practical, there are ways, and you should kind of challenge if all you care about is legal liability and you're saying, you know what, there's no tax benefit, I think I'm going to try something else, right? So you can look at asset protection strategies outside of the LLC, and then also, a big thing is commercial insurance, right? Nice thing about Turo and GetAround is that you get commercial insurance as a part of your renting. Now, there's a whole debate about whether you should have the middle rate or the premium rate and what's covered under which, but I'm not going to get into that. The point is that there's commercial insurance embedded there, where with Airbnb, you don't have that necessarily, right? You do have Airbnb's $1 million guarantee, but for folks that have gone through nightmares of parties, it's a huge dispute to get reimbursed. You can't even get everything back. It might make sense to protect yourself with some kind of commercial policy. If not for your own claims for small things, maybe for something, very terrifying, we just want to sleep better at night, right? So there are other steps you can take to make sure that you're protecting yourself. And if you're very risk averse and you do want to protect your assets, you might want to do more than one of these strategies, right? So I just want to hit home the point that legal liability, yes, does come with the LLC. Remember from that graph, or even this one, right? The clients have to go through the LLC. LLC doesn't own anything, so it can go kaput. But just know that there's other ways to get there. I know I've talked about that a lot, so I'm going to move on. Business credit history, I think, is a very positive one. If you want to go to the bank and get a business loan, you can't do that the day after you get your LLC. You might be able to get a credit card, but you're going to sign a personal guarantee, meaning that it's going to hit you personally at the end of the day. The nice thing, though, is that once you have an LLC or a business entity, you can put a credit card on there, and if if you got a 20K balance and you've got 20K on there, that's not going to hit your personal credit utilization. So it's a good way to save your score from taking on business debt. You will ultimately be responsible for that in your early years, but in most states, most banks will give you a pure business loan after 2 years. So again, if you want to do this for the long haul, you want to start that clock now so that 2 years from now, like where we are in our business, I can put a lease on the business, and God forbid anything happens to the business, but God forbid anything happens to me, but my family's not going to be responsible for that lease, if everything goes upside down. And I take some comfort in that, thinking forward, thinking kind of worst case scenario. It is nice to segment out, like we were talking about, severing out your liabilities and risks, right? So I think the business credit's a big one. Also, hey, you can get a card with good points. And, I know Sean likes his points. I know many clients who like their points. I know many clients who use personal credit cards because they love their points. Well, having a business entity is going to allow you to bring that incentive structure under your business. So consider that, right? So there are kind of non-liability, non-tax things that make sense. And if you want to grow and you want to add legitimacy to what you're doing, having an LLC really supports that. If you're going to be like some of our clients, a 20 property, 30 property, just baller, just looking to go to 40, looking to go to different places all over the world, you may want to just update your LinkedIn with that personal LLC, right? We all know when we see somebody's LinkedIn with self-employed, usually means unemployed, right? So there are kind of silly things that go along with setting up an entity, but really I think the main ones come back to liability protection, come back to legitimacy, come back to business credit, and then there's this last one I put on there, which is anonymity, right? There are ways to set up your LLC through a registered agent that doesn't disclose where you live publicly, right? When you work with a vendor, you don't have to use your own name. When you work with Airbnb, you don't have to disclose your personal social security. You can disclose a federal EIN. That also applies to our Upworkers who, sometimes you get a client, and I know this because I've been around long enough. Sometimes you get so close to the client, you say, you know what, I'm just going to work for you full time off of Upwork. Or maybe you're moving off of Upwork already, I don't know. But the point is they're going to have to issue a 1099. They're going to ask for your social security. I don't want my social security floating around. I'd rather have a business EIN. So that's a benefit there. One thing I do want to kind of highlight, and this is anecdotal at a level, but there is a kind of anecdotal belief that having an LLC lowers your tax liability. And I don't think that it's absolutely true, and I'll explain, is that it might be correlation instead of causation. What I mean by that is if you do look at the statistical number of audits, and the IRS release these every year, more individuals with Schedule Cs get audited than LLCs. So I do want to say that there is kind of this anecdotal belief that Schedule C sole proprietors get audited more than LLCs. And statistically, it's correct, right? But it's a question of whether it's actually causation versus correlation. And I'll explain. What I mean by that is it could be that somebody that has a sole proprietorship, doesn't have an LLC, is just by nature someone who's a lot messier, who's taking more risks, who's got a really messed up Schedule C, and the IRS has kind of figured this out, and there is a correlation between not having any legal structure, not having an entity set up, and just being all over the place tax-wise, right? And there could be a correlation between those who set up LLCs having a little more discipline, a little more structure around how they file returns, being reasonable with the numbers they take, reasonable with deductions, showing revenue, right? You definitely would have, definitely more likely to, if you have a business with revenue, you're definitely more likely to set up an LLC. You've been in business longer, you're definitely likely to be an LLC, right? So it could even be that more businesses that have been around for a long time are Schedule C LLC filers, and that's the reason they're audited less. But if you were to go with that anecdotal thought, you know, if this was a meme, that would be the headline. If this was fake news, that would be the clickbait, sorry, which would be, you know, LLCs audited 12 times less than Schedule C filers, right? So if you want to take and run with that, you can. If you want to be a little more nuanced about it, you can kind of think about it. But that's really the, I think, kind of last point that I wanted to share with all of you. And then just in terms of logistics, setting up an LLC is pretty simple. We call it a module. We have a whole module around what the checklists are for setting up the LLC. We'll share that with you. So we'll get that out to you, and we hope this video adds value. If you want to know when you set up an S-Corp, you're going to want to stick around for the next video. I'll wrap it up there. Thanks.